Assalamualaikum and hi everyone. So today, the six of us, which consists of me, Shah, and my friends Izzah, Ira, Han, Shanish and Sham will discuss and talk about BESI Corporation BERHAD, or known as BESICO. So enjoy! Hi everyone. Will the stumbling BESICO be great again? BESICO is a public listed company that is primarily involved in the manufacturing of flat steel products. Established in 1972, was listed in May 1981 and once traded as high as 37 ringgit 30 sen in 1996. BESICO as an investment holding company via its group principally engaged in three business divisions that is consist of steel, property and furniture. What happened to BESICO? BESICO did not report any profit since 2008, whereby it reported a 14.7 million ringgit net profit. Due to the mounting losses that it had suffered, it was classified as a PN17 status on 2013. It had applied to Bursa Malaysia 4 times to extend its deadline to submit its regularization plan in the past 3 years. Its fifth extension was not granted as it had voided its application letter on 2016. Hence, BESICO was to be delisted from the stock exchange unless appeal was made. So now, we will discuss all the issues faced by BESICO. Hi everyone, I am Shah Izliatul Akmal and I will discuss on the first issues faced by BESICO, which is audit queries. The auditors team are facing some issues which need the management to respond, which will lead the auditors team to express an adverse audit opinion if no satisfactory evidence is provided. Regarding the first query, BESICO assessed the ability of going concern through looking at the major debt repayment which the company unable to make and the ability of the firm to meet the borrowing obligation that BESICO has been defaulted, while the future plans are planning to implement restructuring plan in order to improve the company performance as a whole and convince the investors from China that show positive response and interest to take part into restructuring plan. For the second queries, according to the IAS 12 income tax, deferred tax asset is recognized when unused debt loss carry forward if it is considered probable that will be sufficient future taxable profit against which the loss carry forward can be utilized. BESICO recognized deferred tax asset due to the carryover of losses. As we can see, BESICO is trying to cut off some of its expenses and seize its subsidiaries which do not generate profit and focus more on the profitable activities and on the restructuring plan of the company with the aim to increase its revenue in the future. Because of that, BESICO continue to record its deferred tax asset to carry forward its relief to the next year. For the next query, BESICO recognized PPE using a cost model. Since Giant Steel's BERHAD plan is left idle due to the temporarily ceased operations, the company performed an impairment test on the PPE and found out that fair value less cost of disposal or value in use is less than carrying amount. Therefore, it is necessary to calculate the amount of impairment loss. The new carrying amount will be shown in the statement of profit or loss as impairment loss. Since BESICO used cost model, therefore there will be no revaluation reserve. The justification for the fourth query, the company measures its inventory using cost basis, which is appropriate. According to IAS 2, inventory are to be recognized or measured at the lower cost and net realizable value. Since inventory are measured at cost, The amount needs to be shown on the balance sheet at the amount paid to purchase and not at its selling price. The justification for the last query, there is no provision for various contract has been made due to the offtake agreement is void. It is because the companies had shut down their operations. According to MFRS 137, the requirement to recognize provision is it is probable that an outflow of resources embodying the economic benefit will be required to settle down the obligation. Thus, provision for various contracts are not necessary.
Assalamualaikum warahmatullahi wabarakatuh. I bid to Dr. Hayati and my fellow friends. I am Izzati Shahira and I will continue with the financial statement analysis of BESICO. We proceed with the financial performance. We use horizontal analysis to analyze the financial statement in 2015 and 2016. First, we go to the significant changes in statement of profit or loss. BESICO has recognized high sales but yet suffer losses in both years. These significant changes happened due to the shutdown of Giant Steel because of its bleeding operations. The revenue in 2015 are higher than the revenue in 2016 that bring the changes of 66.38%. Cost of raw materials and consumable use also has significant changes of 74.7%. Since BESICO has discontinued Giant Steel, there are some of the inventories that need to be written off that brings the 94.31% changes. We move to the significant changes in statement of financial position of BESICO. Inventory has been decreasing significantly due to discontinued operation of Giant Steel, which brings the total of 55.32%. Other than that, trade and other receivable also has been decreased significantly due to the recognition of account receivable of Giant Steel, which gave 58%. Lastly, the trade and other payables also has significant changes into 21.16% that indicates BESICO are unable to pay their suppliers due to lack of cash. This shows the company lack liquidity to pay their liabilities. We continue with the financial ratio analysis, which is liquidity ratio, profitability ratio, and leverage ratio. First, liquidity. Liquidity ratio is the ability to convert assets into cash quickly and cheaply. In liquidity ratio, there are net working capital. Net working capital is important because it gives an idea of a business liquidity and whether the company has enough money to cover its short-term obligations. BESICO has negative working capital for both years that indicate they have more short-term debts than short-term assets. This will give a bad reputation to investors who want to invest in BESICO as they are not able to pay their outstanding expenses and also their creditors. Next, current ratio. Current ratio is a liquidity ratio that measures a company's ability to pay short-term obligation or those due within 1 year. It tells investors and analysts how a company can maximize the current asset on its balance sheet to satisfy its current debt and other payables. BESICO has a lower ratio which is below 1 for both years. It shows that they have not enough liquid assets to cover their short-term liabilities. Lastly, quick ratio. Quick ratio is an indicator of a company's short-term liquidity position and measures a company's ability to meet its short-term obligation with its most liquid assets. BESICO has a lower ratio which is down below 1 for both years. They are unable to meet their short-term liabilities without increasing sales of assets or inventory. Next, profitability ratios. Profitability ratios are a class of financial metrics that are used to assess a business ability to generate earnings relative to its revenue, operating costs, balance sheets, assets, or shareholders' equity over time using data from a specific point in time. For most profitability ratio, having a higher value relative to a competitor's ratio or relative to the same ratio from a previous period indicates that the company is doing well. First, net profit or loss margin. Net profit margin is equal to how much net income or profit is generated as a percentage of revenue. Net profit margin illustrates how much of each dollar in revenue collected by a company translates into profit. Any decrease in revenue will result in decrease in profit. BESICO has a negative net profit margin for both years that indicates the business earning is less than its expenditure. Therefore, it will result the company to suffer losses. BESICO also will face difficulty in managing the cash flow since the expenses are more than the revenue gains. Next, return on asset or ROA is an indicator of how profitable a company is relative to its total asset. ROA gives a manager, investor, or analyst an idea as to how efficient a company's management is at using its asset to generate earnings. BESICO has negative return on asset for both years. That shown that BESICO cannot use their asset effectively to generate income. Next, leverage ratio. The leverage ratio is the ability of a company to meet its financial obligation through the debt. The leverage ratio category is important because companies rely on a mixture of equity and debt to finance their operations, and knowing the amount of debt held by a company is useful in evaluating whether it can pay off its debt as they come due. First, debt ratio. The debt ratio is a financial ratio that measures the extent of a company's leverage. The debt ratio is defined as the ratio of total debt to total asset that is interpreted as the proportion of a company's assets that are financed by debt. BESICO has the higher ratio since it is above 1. This shows that BESICO is considered as highly leveraged since most of the assets are financed through debt. Next, debt equity ratio. The ratio is used to evaluate a company's financial leverage. The debt equity ratio is an important metric used in corporate finance. It is a measure of the degree to which companies is financing its operation through debt versus wholly owned funds. More specifically, it reflects the ability of shareholder equity to cover all outstanding debt in the event of a business downturn. BESICO has a negative debt-to-equity ratio both in 2015 and 2016. BESICO might be unable to pay their debt. High debt will lead to higher interest payment and less money to expand their sales revenue.
Hi, Assalamualaikum. I'm Anis Shamsitar. So we'll proceed with our next question. Analyze the retrenchment and layoff arrangement from the perspective of Human Resources Manager for the Managing Director of BESICO. As Giant Steel workers disagree with BESICO's decision to stop the Giant Steel operation and retrench their workers, therefore Human Resources Manager should come up with a new arrangement or idea to avoid and protest or lawsuit from happening. As retrenchment or laid-off is due to the financial problem of BESICO and not because of workers' fault, the HR manager has to follow the process and procedure of retrenchment and laid-off to avoid any issues. The procedure was divided into 3 phases, which is first, pre-retrenchment phase. The HR department must send a written notification to all workers on Giant Steel's plan for retrenchment. Giant Steel must describe in detail the reasons and selection process and procedures of workers to be retrenched. Next, BESICO must notify the Labour Department about the retrenchment exercise and file a form. HR department needs to prepare retrenchment package and conduct individual meeting sessions with selected workers and explain every detail to them. After the individual meeting, the HR department must issue a comprehensive offer letter with details of the layoff package, job handover process, checklist of documents, and other relevant information. Next is second phase. During retrenchment phase, to help relieve the workers' problem, BESICO and Giant Steel need to assist workers in job counseling and job replacement. Necessary advice and information must be provided to the employees on job opening within the industry. The company also can help their workers by providing testimonial letters in support of job application and posting the employees' profiles to HR networking groups within the industry circle in case there is a company that in need of new workers. Last phase is post-retrenchment phase. If the workers agree and were retrenched, HR department must at least get in touch with the employees and find out if they can seek new jobs. Stay in touch with them may show BESICO's concern toward them and value their contributions to the company. Lastly, BESICO and Giant Steel can give them some hope by the promise to give feedback if their employers are seeking a reference check. So that's all from me. We proceed with the next presenter.
Issue that lead to retrenchment and layoff in BESICO is labour protest due to shutting down of BESICO steel plant Giant Steel, and BESICO suffer continuous losses and its financial performance fluctuates. However, BESICO can reduce the possibility to retrench and lay off their workers by creating cost reduction teams. They are responsible for collecting suggestions, monitoring and reducing costs. A solution or suggestion for BESICO and Giant Steel to avoid retrenchment and layoff of their workers is BESICO can use the steel produced by Giant Steel for BESICO property development business. BESICO other business, which is property development, can reduce the cost of raw material as they can get the raw material such as steel from Giant Steel at cost price. The next solution is Giant Steel can exchange workers with other employer within the same industry. By exchanging the worker, both companies can gain mutual benefit, which is cross-pollination of skill, retention of employees, and temporary wage relief. Giant Steel also should consider to change the working environment for a period. Giant Steel should discuss with workers to reduce or change the shift pattern so that the company can eliminate the overtime pay of the workers. Giant Steel also need to consider to reduce shift allowance, bitter or cancel bonus, pension and provident fund contribution for the time being. Besides that, Giant Steel and BESICO also should freeze all recruitment on new intake for vacant posts. After stopping the recruitment of new workers, BESICO and Giant Steel need to identify the current workers who were able to fill the vacant posts. They also need to consider rehiring retired employees that are already familiar with BESICO and Giant Steel business practice. Other solution to reduce retrenchment and layoff is Giant Steel should consider to reduce contract labor by replacing the contractor with permanent workers and consult or discuss with workers and solicit suggestion from workers. Other solution or suggestion to reduce cost is the first one is reduce electricity by switching off air conditioner, electric light and electrical appliances. Second, monitor the usage of telephone and internet closely and encourage employees to reduce unnecessary call and usage of company's internet. The last one is review the usage of company's vehicle and avoid unnecessary travel.
Hi, Assalamualaikum. I am Sharifah Anis. Now I will continue with regularization or restructuring plan. Here are definition of first, regularization plan. If you want to know about regularization plan, you must know about PN17 that stand for Practice Note 17/2005 and is issued by Bursa Malaysia, which relating to companies that are in financial distress. Company that fall within the definition of PN17 will need to submit their proposal to approving authority to restructure and revive the company in order to maintain the listing status. Second, on approval authority is the person or entity occupying the level indicates the framework hierarchy that has the authority to approve a new policy or to approve major changes to an existing policy. Third, on restructuring plan. Restructuring is when a company makes significant changes to its financial or operational structure, typically while under financial duress. Company may also restructure when preparing for a sale, buyout, merger, change in overall goal, or transfer of ownership. Restructuring plan. A company undertakes a restructuring to modify the financial or operational aspect of its business, usually when faced with a financial crisis. The main purpose of restructuring plan are first, to reduce costs. Second is to concentrate on key product or account. Third is to incorporate new technology. Fourth is to make a better use of talent. Fifth is to improve competitive advantage. Sixth is to spin off a subsidiary company. Seven is to merge with other company. And eighth is to decrease or consolidate debt. Let's get back to the question. We do agree to propose the restructuring plan to the board of directors and managing directors of BESICO. There are many issues being highlighted in this case, so we will provide a restructuring plan that consists with some of proposed solutions for the issues. With that, let's proceed with the next presenter.
Hello everyone, I am Han. Now, let's proceed to the justification of regularization or restructuring plan for BESI Corporation BERHAD. There are numbers of proposed possible solutions that can be done by BESICO in order to have stronger financial footing and convince the Chinese investor to revive BESICO.
Let's take a look on the first possible solution, which is cost reduction initiatives. BESICO shall reduce material costs by optimizing the usage of off-cut raw materials instead of selling it as scrap metal. Therefore, BESICO can lessen both of its purchase of new raw materials and also the wastage of raw materials. Other than that, BESICO can manage to reduce costs by implement the latest technology robot-based automation and cut its employee costs. This initiative will enhance the efficiency in the production progress by allowing BESICO to ensure product quality and shorten the time taken in production operations. Next, BESICO can cut the overhead costs since the company should keep track of expenses associated with operating facility. These include the ins and outs of how much things like the property, storage, supply, utility and administrative and supervisory expenses typically cost. Then, BESICO will be able to prepare budgets and make important decision-making as well as identify substantial cost-saving opportunities. Second proposed possible solution is BESICO may create capital injection programs. BESICO need to attract more investors to invest in their company. By attracting new investors, BESICO will gain additional capital to run its business. Also, BESICO shall create numbers of fundraising activities to increase their capital, such as an auction program. Next, BESICO should dispose its subsidiary, which enable the company to utilize the fund as working capital to finance day-to-day operations. The third proposed possible solution is business expansion plan. In its effort to further improve its revenue and profitability, BESICO plans to expand its business operations through enhance its existing business, focusing on quality and customer specification. BESICO also identified 2 additional services to be offered to its customer. The first one is heat treatment service. Heat treatment service is a process used to alter the microstructure of steel, which involves the heating of steel to extreme temperature of 900 degrees Celsius in order to increase the temperature resistance and strength of steel. The other one is hot flanging service. Under the hot flanging service, the steel will be heated up to 900 degrees Celsius to allow flanging machinery to double up the thickness of the dish ends to 70 mm to cater for customer specification. These specifications are commonly used for highly pressurized vessels in various industries including the petrochemical and oil and gas industry. BESICO intend to provide this additional service to other fabrication companies in order to increase its revenue stream. Last but not least, BESICO needed to earn customers' trust by increasing marketing strategies since they have not developed good relationship with their customers. This effort can ensure the frequency of physical visits of customers in order to maintain the relationship with BESICO's existing and new customers, including from foreign countries. In a nutshell, BESICO needs to make an appeal to Bursa Malaysia in order to maintain its public listed status and avoid the removal of its share from stock exchange market. BESICO has extensive experience and technical expertise in the steel fabrication industry, as well as well-equipped fabrication facility that shows the competitive strength of the company. Therefore, it is possible for BESICO to become great again. That's all from all of us. Special thanks to Dr. Hayati Samba and all of our friends. Thank you for watching.